2026 is the year the UK property development market finds its footing. After several challenging years, confidence is finally beginning to return. But the viability squeeze, caught between high construction costs and tight exit values, remains the primary challenge. Developers are turning to partnerships, with 89% either forming or exploring strategic alliances. This isn't a year for the faint-hearted. It's a year for the builders, the problem solvers, and those who know how to navigate complexity. We're Bridge Funder London. In this video, we're going to give you a straight-talking guide to the development market in 2026, the challenges, the opportunities, and how to get the finance you need to build. Let's start with the challenges, because understanding them is the first step to overcoming them. First, construction costs are rising. The Savills Build Perspective Index rose sharply in early 2026 to +3.6, indicating that most sectors now anticipate an upward movement in build costs. Second, labor shortages are biting. The sector faces a structural workforce shortfall of around 240,000 by 2029. Skilled trades are in short supply, driving up wages and limiting capacity. Third, planning reform is moving slowly. Despite government pledges, planning red tape has yet to be cut significantly. However, the autumn statement has renewed focus on planning reform, with a push for brownfield and greybelt land. And fourth, financing is tighter. The era of cheap money is over. Markets expect the Bank of England base rate to settle around 3.5% in 2026, establishing a higher floor for development finance costs. The picture is clear. Developers are under pressure, but those who adapt, who form the right partnerships, and who secure the right finance, they're the ones who will build. Now for the good news. Confidence is returning. Nearly 3/4 of developers have the confidence to invest in their business in 2026. Partnerships are thriving. 89% of developers have formed, or are exploring, strategic partnerships, a sign that collaboration is unlocking projects that might otherwise stall. Planning reform is coming. The government's Yes First framework and the focus on brownfield and greybelt land should provide new opportunities for developers. Demand is returning. With the Freedom to Buy scheme making 95% mortgages permanent, housing demand should strengthen. Exit values are stabilizing. With house prices rising modestly and construction costs leveling off, development viability is improving. The developers who adapt, who professionalize, who get the right advice and the right finance, they're the ones who will thrive in 2026. If you're a developer looking for funding in 2026, here's what lenders need to see. Planning permission. Lenders won't touch a site without it. Your numbers, land value, build costs, and GDV, your experience. Have you done this before? Your cash contribution. Lenders want you to have skin in the game. Your exit strategy. How will you repay the loan? Sale or refinance. A solid team, contractors, QS, and project managers. Don't forget to budget for professional fees. QS fees typically range from £1,000 to £3,000, and architect fees can be significant. Many developers overlook this. If you're applying through an SPV or limited company, the criteria may differ, but that's where a broker's expertise really pays off. The development market in 2026 is complex, but it's full of opportunity for those who adapt. Whether you're a seasoned developer looking to scale up, a smaller developer exploring partnerships, or an investor looking to enter the market, we're here to help. Visit bridgefunderlondon.co.uk, fill in the 60-second form, and we'll get back to you with an honest answer. If we can help, we will. If we can't, we'll tell you straight. Thanks for watching. If you found this useful, hit subscribe. We'll be putting out more videos on what's actually happening in the market and how to stay ahead of the curve.